Hello everyone, John AG here. Welcome back to my channel Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, real market updates that everyone cannot tell you. So please subscribe this channel and love you all of my subscribers for your support. And please watch this video till the very end because YouTube will not push my videos to more people. My friends, today we have to talk about reality. Not the reality they sell you on mainstream financial television networks, where polished anchors smile and tell you that everything is perfectly fine, that the system is resilient, and that central banks have the economy completely under control. I am talking about the real mechanics of human wealth. I am talking about the primal forces of fear, greed, geopolitics, and outright survival. Today we are breaking down exactly what is happening with gold and silver, because it is ready. The setup we have been tracking, analyzing, and waiting for over the past several years is finally here. And if you are not positioned correctly right now, history is going to ruthlessly leave you behind. Let me ask you a profoundly personal question. When you log into your banking app and look at your fiat currency savings, what do you actually see? Do you see security? Do you see a fortress that will protect your family's future? Or do you see a melting block of ice slowly evaporating in the sun? Let me give you the reality check that Wall Street refuses to broadcast. In April of this year, official U.S. inflation came in at 3.8%. That is the highest we have seen since mid-2023. Think about the narrative you were force-fed for the last 2 years. They told you inflation was transitory. Then they told you it was defeated. They told you the aggressive rate hikes worked and that a soft landing was guaranteed. They lied. Inflation is a thief in the night, a silent predator, and it is quietly, methodically siphoning the life energy out of the working and middle classes. But there is a shield. There has always been a shield. And today, we are going to look deeply at the impenetrable armor of gold and the explosive weaponry of silver. Let us rewind the tape and look at the undeniable facts. Just a few short months ago, in January 2026, we witnessed something truly spectacular. We saw gold hit an absolute, jaw-dropping, all-time high of $5,589 an ounce. Stop whatever you are doing and just think about that number for a second. $5,589. For those of us who have been in this physical metals market for a decade or more, that number felt like a massive vindication. It was the market finally screaming out loud what we had been whispering in the dark for years. The global fiat currency experiment is deeply, structurally, and mathematically flawed. But then, as markets always do, it breathed out. Nothing goes up in a straight line, not even the ultimate safe haven. As of today, May 26th, gold has pulled back. It is trading right around $4,495 an ounce. That represents roughly a 16% correction from the absolute top. Now, I want you to go look at the comments section of any major financial forum or social media platform right now. What do you see? You see unadulterated panic. You see retail investors screaming that the commodity bull market is over, that gold has fundamentally failed them as an inflation hedge, and that the ultimate top is permanently in. Listen to me very carefully right now. This exact psychological phenomenon is how wealth is transferred from the impatient to the patient. It is how the institutional apex predators feast on the fear of the uneducated retail investor. Let me explain to you what is actually happening underneath the surface of this $4,495 price tag, because you are being played by a paper derivative market designed to shake you out of your physical position. We are currently standing in the absolute center of a perfect geopolitical and macroeconomic storm. The gold price has been under immense, artificial, and calculated pressure recently, but you have to understand the specific catalysts to see the opportunity. In late February of this year, the entire geopolitical landscape fractured in a way we have not seen since the 1970s. The conflicts in the Middle East escalated dramatically and dangerously. We saw direct engagements between major powers that immediately pushed crude oil prices into the stratosphere and directly threatened the safe passage of the Strait of Hormuz. When the drums of war beat this loudly, the initial knee-jerk reaction of global capital is a rapid flight to safety. But there are secondary and tertiary economic effects that the high-frequency trading algorithms and the central banks execute that the average person completely misses. Consider the India factor. Because of the explosive high oil prices stemming from the Middle East crisis, India, which is historically one of the absolute largest physical gold consumers on the planet, was forced into a corner to defend its foreign exchange reserves. Their import bill for energy skyrocketed, putting their currency under lethal pressure. How did they combat this? They raised import tariffs on gold to a staggering 15%. Prime Minister Narendra Modi actually had to go on national television and urge Indian citizens to stop buying physical gold for a year just to alleviate their national currency crisis. Do you understand the magnitude of that? India imported 676 tons of pure physical gold in 2025. This year, that massive tidal wave of retail demand has a 15% concrete wall built right in front of it. Simultaneously, we have the China factor. Over in the East, we are currently navigating the traditional seasonal weakness in Chinese wholesale demand. The delivery volume on the Shanghai Gold Exchange historically and predictably dips in the months of May and June. It happens every single year, yet every single year, Western speculators treat it like a brand new bearish fundamental. And then we have the Federal Reserve factor back in the West. We currently have the Fed holding interest rates near 3.75%, while the 10-year U.S. Treasury yield recently aggressively pushed back up to 4.59%. The talking heads on television will look right into the camera and ask you, why on earth would you hold a zero-yielding rock like gold when you can get a guaranteed 4.5% return on a government bond? Here is the secret they are desperately trying to hide from you. A 4.5% yield means absolutely nothing if the true shadow rate of inflation is running at 7% or 8% when you factor in the real cost of housing, food, and energy. Real yields are what actually matter. When inflation outpaces the interest you earn on a bond, your purchasing power is still bleeding out. If you only look at the surface level narrative, you might be tricked into thinking gold is in deep trouble. But as a professional, you must look at what the titans of finance are doing with their own money, not what they are saying on television. The smart money is not panicking. They are accumulating. The institutional forecasters at JP Morgan lowered their short-term view to manage retail expectations, but they are still projecting a Q4 2026 average of $5,055 per ounce, with a massive push toward $5,400 by 2027. TD Securities projects a 2026 annual average of over $4,800. But forget Wall Street for a moment and look at the true sovereigns. Central banks around the world net purchased 244 tons of physical gold in the first quarter of this year alone. China's official reserves are sitting at over 2,300 tons, and that is just what they publicly report to the IMF. Their actual shadow reserves are likely triple that amount. Russia is aggressively hoarding. The BRICS nations are moving forward with a ruthless, calculated campaign of de-dollarization, actively settling bilateral trade in local currencies and physical commodities. Why are the most powerful nations on Earth buying every ounce of gold they can get their hands on? Because they can do the math. They know that the debt mathematics of the United States are completely and utterly unresolvable. The sovereign debt is a mathematical singularity. It is past the event horizon. It simply cannot be paid back in current purchasing power. It must be and will be inflated away. And when that realization fully hits the broader public, not just the central bankers, but the billions of everyday working people realizing their paper money is literally burning in their wallets, the price of gold at $4,495 will look like the greatest, most obvious financial gift of the entire decade. If gold is the majestic money of kings, then silver is the money of the people, the money of gentlemen, and undeniably the single most vital, irreplaceable industrial element of the 21st century. Silver is a fascinating, almost schizophrenic metal. It has a deeply embedded dual identity. Half of its fundamental brain thinks it is a monetary safe haven, a historical preserver of human wealth designed to protect against fiat collapse. The other half of its brain thinks it is copper, an absolute industrial necessity required to run the advanced, electrified modern world. And in 2026, those two halves of the brain are engaged in an all-out war for price discovery. Let us look at the brutal, unvarnished numbers. In January 2026, silver went absolutely parabolic, touching an all-time high of $121.64 an ounce. It was a breathtaking, violent, vertical move upward that shocked the derivatives market and caused a wave of margin calls. But you must always remember the golden rule of silver. It takes the stairs up, but it takes the elevator down. Today, silver is trading around $76.28 an ounce. For the retail investor who chased the rally and bought at $110, this hurts. It is a severe emotional gut punch. But to succeed in this space, you must ruthlessly detach your emotions from the daily price action and look exclusively at the underlying fundamentals. You must stop chasing the flashing green number on your screen and start profoundly understanding the intrinsic value of what you hold. There is a famous saying in value investing: price is what you pay, but value is what you get. Right now, the intrinsic value of physical silver is wildly, historically disconnected from its manipulated paper derivative price on the COMEX. To understand this disconnect, we must look at the gold to silver ratio. This is the holy grail metric for precious metals investors. It simply tells us how many ounces of silver it takes to buy exactly 1 ounce of gold. Historically, in the Earth's crust, the ratio of these metals being mined is about 15 to 1. During the height of the Roman Empire, the monetary ratio was legally set at 12 to 1. Today, in May 2026, the ratio is sitting right at 55 to 1. What does a 55 to 1 ratio actually tell us? It tells us we are in a historically balanced, yet incredibly opportunistic range. Neither metal is dramatically mispriced relative to the other, but both are fundamentally undervalued against expanding fiat currency supplies. But here is the genuinely fascinating part that you need to pay attention to. Just a few weeks ago, that ratio was blown out to 62 to 1. It compressed rapidly down to 55 to 1 in a matter of days. Why did that happen? Because of a massive geopolitical shockwave. The United States and China suddenly announced a 90-day tariff reduction truce. Immediately, the global market priced in a massive resurgence in global manufacturing, supply chain normalization, and industrial output. And what single element is needed more than any other for that output? Silver. Silver violently surged 6% in a single trading session. This definitively proves that silver is currently trading heavily on its industrial fundamentals, acting as a tightly wound spring waiting for the slightest fundamental catalyst. You simply cannot build the modern green economy without physical silver. It is scientifically impossible. You cannot build a high-efficiency solar panel, a modern electric vehicle, a smart grid infrastructure system, or an advanced military missile guidance system without highly conductive physical silver. The major photovoltaic manufacturers are desperately trying to thrift it, meaning they are utilizing brilliant engineers to figure out how to use less silver paste per solar cell because the price has gotten so prohibitively high. But the sheer, unyielding volume of global solar demand is completely overwhelming their thrifting efforts. In 2025 alone, silver gained 148%. It showed the entire world what it is uniquely capable of doing when physical inventories at the LBMA and the COMEX actually tighten. We have a severe structural mismatch between global supply and demand. The miners simply cannot pull it out of the ground fast enough, and centuries of above-ground stockpiles have been utterly decimated by the tech industry. You have institutional giants like Goldman Sachs officially projecting a 2026 average of $85 to $100 an ounce. You have Citigroup aggressively targeting $110 by the second half of this year, explicitly citing acute physical supply shortages. When the largest, most connected institutions in the world are telling you there is a physical shortage, and yet the paper price is temporarily dropping, that is a manufactured entry point. That is the matrix temporarily breaking down, offering you a fleeting glitch. You take the glitch. You buy the physical asset while paper speculators are panicked. I want to take a step back from the charts, the ratios, and the geopolitics for a moment. I want to speak directly to you, human to human. Why do we actually do this? Why do we spend our evenings staring at these screens, painstakingly tracking these complex geopolitical events, and stacking these cold, heavy metals in our home safes or private vaults? It is not just to get rich in fiat terms. Getting wealthy is merely a byproduct of being fundamentally right. No, we do this because we deeply understand the profound sanctity of human time. Think deeply about what money actually is at its core. Money is not cotton paper. Money is not a digital digit on a bank server. Money is a physical representation of your human energy. When you wake up in the morning and go to work, whether you are pouring concrete, writing software code, teaching a classroom of children, or driving an 18-wheeler across the country, you are trading your literal life force, your finite, irreplaceable time on this earth, for a token of exchange. That token is supposed to flawlessly store your time so you can spend it later to feed your family, to provide a warm roof over their heads, and to guarantee their future security. When an unelected central bank decides to print trillions of dollars out of thin air to fund endless foreign wars, or to bail out a reckless, over-leveraged commercial banking system, they are not just managing the macroeconomy. They are directly reaching into your pocket, and they are stealing your time. They are invisibly devaluing the precious hours you spent away from your children. They are actively diluting your life energy. Inflation is the most regressive, devastating, and immoral tax ever conceived by mankind, precisely because it mercilessly targets the poor and the working class, who hold their meager wealth in cash, while the financial elites hold their wealth in hard assets like commercial real estate, equities, and precious metals. This is exactly why gold and silver are deeply, profoundly human investments. They are not just mere commodities traded in Chicago or London. They are a physical declaration of financial independence. When you hold an ounce of gold or a heavy tube of silver coins in the palm of your hand, you hold something that carries absolutely zero counterparty risk. It does not require a complex password. It does not require a stable Wi-Fi connection. It does not require the permission of a corrupt bank president, a failing prime minister, or a panicked Federal Reserve chairman to have intrinsic value. It is real wealth that exists completely outside the fragile, interconnected matrix of global debt. Over my career, I have spoken to men and women in their 70s who watched their entire life's pension get cut in half by the hidden tax of inflation. I have seen the raw, paralyzing fear in the eyes of young, hardworking parents who honestly do not know how they will ever afford to buy a home when the currency is losing its purchasing power faster than they could ever possibly save. The emotional roller coaster of investing in precious metals is undoubtedly brutal. When gold fell from $5,500 down to $4,500, I know for a fact some of you felt a sick knot in your stomach. When silver dropped from $120 back to $76, I know the dark clouds of doubt crept into your mind. You sat awake at night and asked yourself, did I make a terrible mistake? Was I a fool to trust the metals? But I challenge you to look at the grand sweeping arc of human history. Look back 5,000 years. Every single fiat currency, every single piece of paper money unbacked by a physical, tangible asset, has eventually and inevitably returned to its intrinsic value, which is exactly zero. Whether it was the Roman denarius, the French assignat, the Weimar papier mark, or the Zimbabwean dollar, the trajectory of unbacked fiat currency is always, inevitably, and mathematically downward. Gold has never gone to zero. Silver has never gone to zero. They are the only financial assets in the entire history of the human race that have successfully survived every major war, every global plague, every empire's total collapse, and every massive technological revolution. They are the ultimate financial anchor of humanity, holding steady while the paper storms rage around them. So we find ourselves standing here in May 2026. The economic storm is far from over. It is merely pausing to gather devastating strength. We are currently experiencing a temporary engineered pullback driven by hawkish Fed minutes, a completely illusory strong US dollar, and seasonal demand dips in the Eastern markets. But the foundational structural pillars of this historic bull market remain completely and utterly intact. What is the actionable path forward for you? What must you deliberately do today to protect your family and solidify your legacy for the generations that will follow you? First and foremost, you absolutely must master your emotional discipline. Do not let the day-to-day manufactured volatility shake you out of a generational, life-changing position. Institutional forecasters, bullion banks, and massive hedge funds have billions of dollars at their disposal to purposely paint the daily charts red, to intentionally trigger your stop losses, and to create widespread retail panic. They desperately want you to sell your physical assets for cheap so they can quietly accumulate them to cover their own massive short positions. Do not give them your gold. Do not surrender your silver. Recognize a 16% correction for exactly what it is, a healthy, entirely necessary, and mathematically predictable breathing phase in a massive macro bull market. Secondly, you must intimately understand the allocation ratio. If you are looking to deploy capital right now in May 2026, look closely at that gold to silver ratio of 55-1. Because it sits right in the middle of historical norms, it strongly implies that both metals currently offer incredible asymmetrical value. A common, historically sound, and heavily battle-tested strategy is a 3-1 or 4-1 allocation in favor of gold by dollar value. Gold is your anchor. It provides the ultimate monetary stability, dampens portfolio volatility, and guarantees wealth preservation. Silver is your sail. It provides the explosive, life-changing upside leverage and the direct, unhedged exposure to the massive global green energy transition. You critically need both to successfully navigate the treacherous economic waters ahead. Third, and perhaps most importantly, you must aggressively ignore the daily noise and flawlessly track the long-term fundamentals. Ignore the mainstream financial headlines desperately trying to spin a 3.8% inflation rate as some sort of policy victory. Ignore the suited pundits arrogantly telling you that high interest rates are going to definitively crush gold. Real, inflation-adjusted yields are the only metric that truly matters, and as inflation remains aggressively sticky and deeply structural due to rapid deglobalization and fractured global supply chains, those real yields will eventually, inevitably, turn deeply negative again. When the broader market finally wakes up to the terrifying realization that the Federal Reserve simply cannot hike rates high enough to stop inflation without completely and utterly bankrupting the US Treasury, that is the exact moment the massive debt dam finally breaks. That is the moment when gold violently clears $6,000 and silver leaves the $100 mark in the dust forever, never to be seen again. My friends, we are collectively living through a profound, historic economic transition. We are living through what historians call the fourth turning. This is the exact chaotic moment where the old, debt-based system violently fractures and a brand new monetary system is painfully born. The extreme price volatility you are seeing today is simply the terrifying labor pains of that new system coming into existence. Do not be afraid of it. Fear is the mind killer, and fear is the portfolio killer. Be intensely, ruthlessly prepared for it. Remember the ultimate rule of global economics. Wealth is never truly destroyed, it is only transferred. It is transferred from the panicked to the patient. It is transferred from the financially uneducated to the financially educated, from those who blindly trust in government paper to those who securely trust in stone, steel, gold, and silver. It is ready. The fundamental setup is utterly flawless. This current pullback has graciously given you one last fleeting window of opportunity before the harsh reality of the geopolitical landscape and the unstoppable sovereign debt mathematics fully price themselves into the physical market. Stand incredibly firm. Hold the absolute line. Protect your family's time, protect their stored energy, and fiercely protect their future. Thank you so deeply for being a part of this growing community. Thank you for aggressively seeking out the hard truth when it is so much easier to blindly accept the comfortable mainstream lie. Remember what we said at the very beginning of this broadcast. If you haven't yet, please subscribe to my channel, Aurex. Here, you will find the real information, the unvarnished real market updates that everyone else cannot and will not tell you. I love all of my subscribers for your incredible, unwavering support. Please like this video to help defeat the algorithm. Share it immediately with someone in your life who desperately needs to wake up. And leave a comment down below with your own personal strategy. Are you aggressively stacking gold right now, or are you heavily weighting your portfolio towards silver? Let me know in the comments. Until next time, stay highly vigilant, stay aggressively educated, and keep relentlessly stacking. This is John A.G.